You're here because you saw that chart. Beyond Meat. It looks absolutely impossible, doesn't it? A stock that everyone left for dead suddenly turns into a rocket ship. Well, today, I'm going to show you exactly how this happened, and more importantly, why this is so much more than just another meme stock flare-up. We're going to break down what a short squeeze really is. We'll get into the massive role Walmart just played in all this, and I'm going to reveal the one huge risk that right now it feels like almost nobody is talking about. Stick with me through this. This is going to be a fast one, and I promise you the payoff is right around the corner. So here's our roadmap. We're going to start with the epic crash that set the stage for this madness. Then we'll dive deep into the squeeze itself. After that, we'll look at the two big sparks that lit the fuse before we get a serious reality check on the actual business. Then we'll put it all together, and I'll give you a playbook so you're ready for the next one. Okay, first things first, let's set the scene. You really can't understand this explosion without understanding the total collapse that came right before it. I mean, this was a company that was completely given up on. Let's just rewind for a second. Back in 2019, right after the IPO, Beyond Meat was flying high, touching over $230 a share. But what came next? A brutal multi-year collapse. We're talking more than 99% wiped out. In fact, just last week, it hit a low of 52 cents. Can you even imagine that ride? And this is the most critical piece of the puzzle. Over 60% of the company's tradable shares, what we call the float, were sold short. Think about that. A massive, massive crowd of investors were all betting that this stock was going to zero. They basically and accidentally built a giant tinderbox, just waiting for a match. So what happens when you light a match in a room that's just full of gasoline? You get a squeeze. Let's break down exactly what that means, because it's a powerful force. A short squeeze is pretty much a feedback loop from hell for anyone betting against a stock. It kicks off when a sudden price spike forces all those short sellers to start buying back the shares they borrowed. But here's the kicker. Their forced buying just pushes the price even higher, and that forces even more shorts to buy. It's this vicious, explosive cycle. It all comes down to this simple 1-2-3 process. Step 1, investors borrow shares and sell them, hoping the price tanks so they can buy them back for way cheaper. Step 2, some unexpected good news hits and the price just spikes hard. Step 3, the short sellers start to panic. They are forced to buy shares back at a higher price just to stop the bleeding, which of course just adds more fuel to the fire. Okay, so we have the tinderbox. Now we need the match. And for Beyond Meat, it wasn't just one spark. Oh no, it was a perfect 1-2 punch that landed at the exact right moment. Spark number 1, Roundhill adds the stock to its official meme stock ETF. Now, this is a big deal. It creates forced buying from the fund itself, and it puts the name right back on the radar of every trader out there. At the same time, spark number 2, Walmart announces it's expanding distribution to over 2,000 stores, adding new stuff like a 6-pack of burgers and a Korean barbecue-style steak. What a perfect headline. And the result of that 1-2 punch? Absolute frenzy. In one single day of trading, over 1 billion shares changed hands. That number is just staggering. It tells you everything you need to know. This wasn't some calm institutional accumulation. This was pure speculative heat. And this really captures the moment perfectly, right? The meme energy, the heat, it can create these incredible lifts. But the real question is, what happens when that energy fades? That's when you have to look at the actual business itself. So let's do that now. Let's pivot. We're going to move away from the fire and excitement of the price chart and get into the cold, hard reality of the company's financials. Because underneath all this noise, there's a much, much tougher story playing out. Yeah, this is where the story gets really complicated. The stock is soaring, right? But the sales, they've been falling. Just look at this trend. Sales peaked back in 2021 at around $465 million. This year, they're projected to come in around $326 million, all while the company just continues to burn through cash. Now, they did just make a really big move to try and survive. They converted about $1 billion of their debt into stock. So the good news, it cleans up their balance sheet. It takes the immediate risk of bankruptcy right off the table. But the bad news, especially for existing shareholders, massive, massive dilution. The number of shares out there just multiplied by about 5 times. This is the key takeaway from this whole section. The price action we've seen is not a reflection of some amazing business turnaround. Not yet, anyway. It's a symptom of extreme market mechanics, insane positioning, and a sudden flood of attention. Okay, so it's time. Let's connect all the dots. Let's put everything we've just talked about together and reveal the full recipe for this incredible stock market explosion. Here it is, the perfect storm. You had the meme ETF inclusion forcing institutional buys. You had the Walmart headline giving everyone a simple, positive story to rally around. You had that extreme 60% short interest sitting there like rocket fuel. You had relief from the debt deal taking bankruptcy fears away. And then, the whole thing was lit on fire by a sudden, massive spike in attention. It was a classic, textbook case of flow over fundamentals. You know, a question I get all the time in situations like this is, how long can this last? Well, short squeezes are rockets, and they can keep flying as long as there's fuel. And that fuel is made of three things: more short sellers who need to cover their positions, a constant stream of new buyers, and fresh headlines to keep the story alive. When that fuel runs out, the rocket comes falling back to earth. Okay, so how do you navigate this kind of chaos? I want to give you a mental framework. Now, this isn't advice, it's just a way to think, a way to protect yourself when the market gets this wild. First, you have to have a plan. Before you even think about buying, know your entry point and, way more importantly, know your exit point. Next, define your risk. How much are you willing to lose on this idea? Write it down. Then, ask yourself, what would prove me wrong? Is it a piece of bad news? A technical breakdown on the chart? Have a clear point where you know your idea is busted. And then, you have to watch the data. Is the short interest dropping? Is the volume peaking? Are there any real catalysts, like an earnings report, coming up? Your number one job is to protect your capital, always. If you only remember one thing from this entire explainer, please make it this sentence. A sudden flood of attention is what moved the price. But over the long run, the company's actual business fundamentals, they will be the final judge.
Beyond Meat just gave us an absolute masterclass in market dynamics. So if you want to get ahead of the curve on the next one, make sure you subscribe. Because in my very next video, I'm going to show you the 3 tells that show up almost every single time. They can help you spot a squeeze before the rest of the crowd piles in. Thanks for watching.